It's the last show of the year with my friend Rudolph, and you see the color of that stripe of that necktie? That's orange. That's Broncos. Here we go again. The last report of the year is the one in which we're supposed to do a forecast for the year ahead, and I struggle because I don't believe anybody really predicts the future. I mean, you get some hunches, but the stand-up predictions of the financial future, I have to fudge. I have some deep hunches about next year. The first thing is, I think next year's the most unpredictable year ahead that I can remember. I'm sure there have been other ones. There probably were other ones that I didn't know in December were going to be as unpredictable as they turned out. But next year's going to be nuts. I mean, just nuts. I mean, Donald Trump alone would make it nuts. But the first thing that is going to make next year crazy is the Fed says that it's going to raise the overnight cost of money at least 1% next year, and then another percent the next year, and another percent the year after that. The bond market here in the United States says horse feathers. No, you're not. And the gulf between the Fed's stated intentions and what's priced into the market as expectations, never seen anything like that. That's a setup for volatility. A crazy year means volatility. I don't have any idea if mortgage rates will be higher next year than they are right now. My hunch a year ago was that they weren't going to change much, and they really didn't. They didn't change at all. The entire 2015 mortgage rates stayed between 3 3/4 and 4 1/4. That's a half a percentage point. Next year, look for that to double. The mismatch in expectations between the Fed and the market means that new data is going to arrive, which the market's going to think, holy smokes, we're wrong, and will likely overshoot, overcorrect, reverse. We're going to do some staggering around. The next really crazy piece is, ordinarily elections don't matter to the Fed. If the Fed thinks it should tighten, it'll tighten. It did in 1980. May have cost Jimmy Carter his job in favor of Reagan. The Fed tightened again in 92. It might have cost Bush Sr. his job. And the Fed did again in 2004. It'll tighten if it thinks it needs to. But politics can come into play. In each of those intervals, the Fed had, the public knew that we had an inflation problem, and the Fed had to lean against it. Now we sit here with all of the candidates, right, left, and center, promising the American people faster economic growth, higher wages. The Fed says the economy's growing too fast now. It says the job creation monthly is running about double what the Fed thinks is prudent going forward. And I don't want to see a politicized Fed next year, but it's going to occur to some one of these bozos next year, the leading candidate being Mr. Trump, to give the Trump treatment to Janet Yellen. That can make things a little goofy. The last piece for next year is what happens overseas is more important than what happens here. Japan is a dead letter. We're used to that, but it's not going to revive. Europe looks as though it's joining Japan in the dead letter box. The odds of meaningful recovery in Europe are real low. If Europe does begin to recover, that's going to add juice to interest rates here, but low probability. The wild card last year, maybe every year, is China. China slowed more in 2015 than I thought it would. It slowed more in 2015 than nearly anyone thought it would. Today we got news that Chinese mainland shopper visits to Hong Kong are down 15% year to date. That's a lot. That says the slowdown's bigger than people want to talk about. Yesterday we got word that the chairman of China Telecom was dragged away by the party enforcers. It's not a pretty sight in China. Its reforms cannot work if imposed. You can't impose freedom. China will continue to grow, but its growth will be dependent on more state stimulus. And the money for the state stimulus is going to come from the rest of us. China's going to continue to run an enormous trade surplus. It's going to do it with dirty baseball. and it's going to produce a slowing pressure on all of us. Sitting here, it's Wednesday night, December 30th. My hunch is that the market's right and the Fed's wrong. The deflation pressures and slowing pressures in the external world are so strong that the Fed doesn't have any basis for trying to intercept an inflation problem that we're not going to have. Given the likelihood of surprises between now and a year from now, I do hope this tape will be burned and wiped from whatever sites it winds up on. Happy New Year.